Hey, welcome back. My name is Alex, and in this channel, we document the growth of a $100,000 account I've created for my newborn son. Every week, we go over some of the top moving positions in the account, some of the moves that we've made, and some moves that we might make going into the future. If that's what you're into, stick around. All right, so as you can see here, the account sits at 112,680, and below that you can see how the account is performing versus the S&P 500. And one thing about this account I've created is it's not your standard 100% equity account. It's mixed with some bonds, which is some fixed income, and also some options. And what I'm going to do later in the video, right after this segment, is kind of show you guys every single position with a heat map. So you guys can see what I'm doing. And also, if you guys want to check out any moves that I'm making like live, I've actually connected the account with a website that tracks every trade. So click that link in the description. You guys can see everything I'm doing on a daily basis. So with that, let's move on to this heat map. So as you can see here, this is the heat map of the account. Of course, you know, bigger squares are bigger positions. I think the largest position we have so far is like 4.5%, which would be the bonds and Tesla and, you know, KWEB and CDE. And then it gets smaller from there. I think the smallest position we have is about like 0.2, but those are just mess around positions. But 1% is pretty much the cutoff. So we go from 4% to 1% in the account. And so what I wanted to show you guys today is some two positions that I entered this week via options and show you guys the strategy that I'm using to enter, why I'm entering, you know, exactly what I'm doing here and what I'm thinking going forward. And then towards the end of the video, maybe some things that I'm into and I'm going to add to the account maybe next week. All right, so the two positions I want to talk about today is first, Confluent, CFLT, and second, DigitalOcean, DOCN. And as you can see here, in Confluent, I bought the $15 call out in 2027, and I sold the front month September $20 call. And then with DigitalOcean, I had bought the $25 call, and I have sold the $35 call in the same fashion, buying the 2027 and then selling the front month September calls. And I'll show you why I'm doing that and what benefits they have for the account moving forward to get some more leverage. But with that, let's go to some TA and show you guys, you know, why I entered and why I sold the calls when I did, and why I bought the long calls when I did. All right, so as you can see here, this is ticker symbol CFLT. This is Confluent. Essentially, this is a software stock that had earnings a couple, you know, I think a week or so ago, and they sold off because they sell a lot of shares. But this is a leading stock in its industry group. It's just very expensive. And, you know, typically every time this thing sells off, it's done it in the past many times over the last couple of years, we get a nice bounce off this level. So, you know, we do Wyckoff on this channel. And anytime you kind of get this kind of volume spike on the right side of a base like this, I've done some research and I basically think that this is an accumulation range and that we are about to enter a spring, which is the last point to buy, you know, before it actually begins its uptrend. I'm going to post a little Wyckoff schematic here about what I'm talking about. But essentially, you know, when you're buying at the low end of the range into a spring, it's the best place to buy for a swing and also a position trade. So, and that's what I was doing. And then, you know, I could always be wrong. So I made sure that when I got into this position, I also sold some front month calls just in case I was wrong and it does go into a downtrend. It's going to cushion me a little bit because this thing is supposed to V, but it could actually not V and it could totally fail. And at least we have some protection and we can keep selling those calls and generate some income from this position, even if we're wrong. So it's we're trying to make it a win-win situation. So we got in with the $15 calls here, and then we sold the $20 calls, which is above this candle, which would be the point of control candle. So if it was to break above this candle, that would be great. That'd be bullish. We could buy those calls back. and then maybe sell the what is this, the 25s. We could always move the short month call up and out, because you know, if the stock starts moving against those short-term sold calls, you know, we could sell 1 month out and we'll get more premium anyways, and then the leaps will be moving in our favor, you know, for the entire move. So that's what we could do. But if it ends up failing, we're gonna make a good yield off of those short calls being sold. So that's why we do that. So Confluent, it's in a nice spot here. We got it at a cheaper price, right? Because this is a very highly valued tech stock, but now it's become very cheap. So, you know, that's why we bought it, and we're holding it till, you know, we're trying to hold these things for longer than a year in this account, and then make income along the way. So that's Confluent. Those are our thoughts there. Let's move on to DigitalOcean. All right, so this is ticker symbol DOCN, DigitalOcean, and essentially it's the same kind of a setup, a little bit different, where DigitalOcean actually had earnings and it didn't gap down, it actually gapped up, which is great. Okay, yeah, you want that stock in this position near the bottom end of the range that had this little spring right here, to gap up and start moving straight up. And basically that's what the stock was going to do, but they sold some shares into it, okay? So, or they raised some debt, or I forgot what they did, but essentially one or the other, and the stock pulled back to where it started the move. So basically, if you got in here, you're basically getting in with some free intel, right? Intel of the good earnings from the stock, because they sold into it. And obviously a lot of guys had the same opinion that I did, and they were buying, you know, into this earnings gap. And we'll see, you know, this thing it's a kind of a pullback buy. It's an aggressive pullback because they were selling shares. But same exact position as CFLT. You know, this is the range that we see. And the bullish thing about this stock was they didn't even pull it to the bottom end of this range, right? They didn't even get to the support area. It stopped and made kind of like a higher low here, and then it started to go. So it's a little bit stronger than CFLT, so it has a better chance of actually working out. So what we did here was we got long the $25 leaps, and then we sold the $35 leaps, or not leaps, but the $35 short end calls. Just the same explanation as before. You know, we basically, you know, we could be wrong, and if we are wrong, we're gonna have a nice little cushion, and generate some yield out of these leaps, essentially. But if we're right, we can always kind of, you know, buy back the calls, sell them higher, and play that whole game with DigitalOcean. But software has kind of been beaten up recently, so it's a decent place to buy these stocks. And I mean, look, at the highs, it was about, you know, $130. If software, you know, doesn't get eaten by AI, these stocks should do really well. So that's DigitalOcean. The next thing I want to show you guys in this video is some big moving stocks in the account. You know, whenever we kind of track, because this is a diversified portfolio, so if we kind of monitor, okay, which positions are moving the most and which positions are going down the most, it will tell us something about the market. And we got some news later today, or at the end of the day, or even midday, that the solar stocks were moving a lot, and we had a small position, a 2% position in ARRY Technologies. So just thought I'd show you guys what's going on over there. And then what that might mean going forward, and whether we might up that to a 4% position, like most of our other themes. Like, we try to average about a 4% position per theme, but we've kind of been under allocated here, so we could actually kind of beef that up, and maybe we'll buy some call options and do the same thing as in DigitalOcean and CFLT in some solar names. So let's go check out the ARRY Technologies and see what's going on. All right, so what you're looking at here is ticker symbol ARRY. This is ARRY Technologies. Essentially, it's a solar stock. They do some solar tracking. You know, when the you know, the solar panel is out there, basically what they do is they are able to track the sun, right? So and create these giant you know, solar farms, and so they need that technology. But yeah, so I mean, they work with industrial kind of applications. It's different than the sun runs and the first solars and the end phases and the solar edges. But essentially, I guess like something happened with the treasury, and we might get some subsidies out of these things. Solar was one of the best performing groups in the last Trump administration, so that's why we made that video and we were buying it in here. In that video, we said we were going to sell some calls, so we've been selling calls this whole time. And so as you can see here, we got like 300 shares, and we got one call sold here at 800 and two calls sold at 9. So we like this move. We think it could either continue or just kind of drift up like this, just similar to when CDE had its big move, like maybe looking for these kind of candles here. But we like having the subsidies back into the solar theme because that's a big deal. So we might be looking at adding to maybe E and PH in this account. This one kind of sold off at the end of the day here, so who knows, this might not be the best one, but maybe SEDG, same thing. We're in this in a different account, and we're in E and PH in a different account, but maybe we add it to the public account because we think we want to get that 4% exposure to solar. So going into next week, that's probably what we're going to do. Or maybe Sun Run or some. We're going to figure out one of these to buy, because it's probably going to work out if they get the subsidies back, and we like these kind of moves. But of course, big volume day, big move day. So we're a little bit cautious here because there's obviously a lot of sellers coming in. So we need to be very careful. And watch the reaction. So essentially, we're going to watch this reaction, and if it's a decent reaction, like something similar to like CDE, we're going to buy that dip, and that's kind of how we do it. And for instance, like this kind of a dip on this is CDE, but what we're going to do here is we're going to wait for a couple candles to maybe get back into one of them. So what we'd like to see is we'd like to see it gently dip down. So if we got something like this, where the the 16 period moving average caught up to it. I mean, this array is not even that extended here. If you look at this extension from the 16 period moving average, this thing can get a lot more extended. Out here it was what was this? It was 32% away from that moving average. Right now, currently, it's about 24%. So this thing can get much more extended, but it's still in that area. That it's trying to make moves, and right here, like, what is this? This seems to be 17% is kind of the typical pullback. So it's at 24. So this thing could totally pull back, and I think that's probably what we're gonna do going into next week. Maybe buy more array. But that's what we're looking for. We're looking for just a shallow pullback to add to these positions. So with that, that's basically the video. So accounts doing well, 2 new positions, and we're going to probably add to some solars going into next week. Hey guys, thanks for joining, and have a great weekend. Cheers.